Okay guys, so in this video we are going to do an introduction of IFRS 10. So when we talk about IFRS 10, we're talking about consolidation of financial statement. So remember, this process has started from IFRS 3 when we do a business combination. Now the business has combined. We already do the process of buying another business. Now we are talking about two or more business. Okay, then the first things that you need to understand under IFRS 10 guys is the issue of control. Okay, so when we talk about a control, IFRS 10 introduced the concept control, where entity consolidate another entity when it has the power to govern the financial or operation policy of that entity. Okay, consolidation decision, IFRS 10 provide guidance on how to assess whether the entity should be consolidated, considering the fact such as rights, exposure to variable return, and the ability to influence decision making. Okay, let's start by a word control. If we are saying that the company is the one that have a control, number one, what you can check is the percentage. If the percentage is above 50%, if it's 50% or more, you can assume that this company has a what? Has a power. But guys, it's not only the percentage that you can see that this company has a power. I'm gonna do example. You can also check the functions. The company that is controlling finance, okay, the company that is controlling a finance, if you are the one who is holding money for stock fail, guys, you know that if you run away, the stock fail is over. Similar case with this one. If you are holding a finance, if you remember, we're talking about different companies, let's say two companies here. If I'm the one who is holding finance, guys, no matter how many percentage I own, even though I have a share of 10%, I have a control, because if I run away with money, he's finished. This one is finished. So which means that finance must be considered as well. You need to check which company is controlling a finance before you even consider the issue of percentage. But if they didn't say anything and they just state percentage, you can check the percentage that this person have a control. Okay, and also the company that have ability to influence decision making. That's another point that you need to consider. So after we have identified that, then we can conclude that this company is the one that needs to do what? To prepare consolidated financial statement. So when we talk about consolidated simply means that a combination of two or more financial statement. In other words, we are taking statement of this company and this company, and we combine them together. In other words, we have financial statement A. Now we are combining it with financial statement B. Simple as that. But firstly, identify who is going to do that. Okay. Now, the second step that you need to know is the issue of intragroup. Issue of intragroup. Okay, when we talk about intragroup, in other words, we are talking about a transaction that happened inside the group. Okay, you can find that before we do combination with this company, we used to sell each other an item. And when we go to group statement, guys, it's not allowed for you and your business partner to sell to each other and make a profit. Okay, I'm going to do an example of what is not allowed. Okay, once you find intragroup or transaction inside the group, what you need to do under IFRS 10, you need to fully eliminate the profit or the different. Okay, number one, you are not allowed to sell goods to each other. Okay, you can find that they say that company A sold an item to company B, which are in the same group, which means that what you need to do in that case, you need to reverse that revenue. Okay, you must reverse that revenue in full. You're gonna see it when we do an example. So for this video, we're doing only a basic. Okay, another one, guys, change of policy. Change of policy. For example, guys, we can talk about a policy of a depreciation. If an asset is moving from company A to company B, maybe company A was using a straight line, and now when it's moved to company B, now it's using a diminishing balance method. So it's not allowed to change a method, which means that this side, for example, depreciation was saying is 50 and this side now is 40. What you need to do is to add the difference of 10. To do what? To consolidate financial statement. Okay, because it's not allowed to change the policy. They assume that it's like it's moving from one room to another room, not from one entity to another entity, because we're in the same group. Okay, we're in the same group. Okay, and you also are not allowed to change the cost of item. Cost of item is like if the computer was costing 400, must also cost 400 when it's moved to company B. If it's cost 450 this side, we need to reverse 50 rand. We need to subtract it. Okay, and another thing, no loan. No loan is allowed. You can't borrow each other if you are in the same group. Okay, in other words, like you can't borrow each other with your partner and also make a what? A profit of interest. Okay, and the first thing that you are going to do in this kind of transition, you are going to reverse loan first. Then the next step, now you are going to reverse what? Interest. You can't borrow each other in the same group and make a profit of interest. Someone is going to pay interest expense, someone is going to receive interest income. It's not allowed inside the group. You are one item, in other words. Okay, and the last thing, you are not allowed to pay each other dividends. Yes, we know that company A buy company B, and company B is going to declare dividends which this one is going to share. But when we come to consolidation, that dividend paid to company A must be reversed. It's not allowed to pay each other under a group statement in terms of IFRS 10. Okay, so we're going to do part 2, which I'm going to do a financial statement, which we are going to do a combination of balance sheet, income statement, and equity. So please make sure that you stay tuned, subscribe to this channel so that you can get part 2 as well. Thank you so much, guys, for your support. I'm gonna see you on the next standard.